All right, let's talk about NVIDIA. I mean, this stock has been on an absolute tear lately. So in this explainer, we're going to dive deep into a technical report to really understand what's fueling this incredible surge and, maybe more importantly, what warning signs might be flashing just under the surface. So where do we stand right now? As of the latest data, NVIDIA is trading at $201.03. Now that number, that reflects a huge recent rally, but what's the full story behind it? And this quote right here, this is the whole story in a nutshell. It perfectly captures the tension that we're going to explore. On one hand, you've got this strongly bullish trend, but on the other, you have that word overextended. It's kind of like a sprinter who's running at a record pace. It's amazing to watch, but you have to wonder, how long can they possibly keep that up before they need to catch their breath? To really get what's going on, we have to start with the basics. We've got to pop the hood and look at the engine that's driving this whole move: price and volume. This is the raw data, the stuff that tells us what's actually happening in the market. So here are the last 5 trading days. You don't need to be a Wall Street genius to see the story here. Just look at that close column. We go from 180 to 182, 186, 191, and then, bam, a massive leap to over $200. That is a clear, powerful march upwards. But price only tells you half the story. The real story is in the volume. Look at October 28th. The number of shares traded nearly doubles from the day before, jumping from around 150 million to almost 300 million. This wasn't a slow drift up. This was an explosion of interest that just lit a rocket under the stock. And just to put that into perspective for you, that one day of trading, that was nearly $60 billion changing hands. That's not just a few retail investors getting excited. That is a massive amount of market focus with some very big money making some very big moves. Okay, so the raw data is screaming strong trend. Now let's move over to the technical dashboard and see what the indicators are telling us. What signals are out there confirming all this bullish strength? Well, one of the most classic signs of a really healthy trend is the alignment of its moving averages. You can think of these as different speed trend lines. When they're all lined up, all pointing up, with the fastest one on top and the slowest on the bottom, that's a really, really strong signal of sustained momentum. And here you can see that perfect alignment. The short-term average, that's your immediate support at about $191. Then, below that, you've got the midterm safety net at 180, and way down below is the long-term anchor at 147. They're stacked just like you want to see them, each one providing a potential floor for the price and just confirming how strong this uptrend is. But remember that quote from the beginning? Strongly bullish, but overextended. So far, we've only really looked at the bullish side of things. Now let's flip over and look at the dashboard's warning lights to get the full picture. And that, right there, is the crucial question. An engine just can't redline forever without something giving. The data shows the car is moving incredibly fast, for sure, but the engine is running really hot. So how do we actually measure that heat? Well, we use an indicator called the RSI, which stands for Relative Strength Index. The easiest way to think about it is like a tachometer for a stock's engine. It tells you how fast the engine is revving, and if it revs too high for too long, it enters a red zone called overbought, which kind of suggests a cool down might be coming. And here's NVIDIA's tachometer. The overbought red line is generally considered to be at 70. Well, NVIDIA's RSI is currently sitting at 69.41. We are right on the edge of that warning zone. The engine is absolutely screaming right now. And if that wasn't enough, another, even more sensitive momentum gauge, it's called the Stochastic RSI, it's already maxed out. It's reading 100 out of 100. It literally cannot go any higher. This is another really strong signal that the pace we're seeing right now might not be sustainable. So what we've got here are two powerful competing forces. You've got this incredible bullish momentum on one side and these clear overbought signals on the other. The report suggests this tension creates 3 potential scenarios for what could happen next. So the 2 main possibilities are basically a battle between momentum and exhaustion. In the bullish corner, the buyers just keep piling in, the volume stays high, and the stock smashes through its recent high of about $203. But in the bearish corner, those overbought signals win the day, traders start taking profits, and the stock pulls back to find some support at a lower level, maybe somewhere around $196. And then, of course, there's always door number 3. Instead of a big move up or a big move down, the stock just pauses. It trades sideways for a little while, consolidating around that $198 mark, and it just lets those hot indicators cool down while the trend basically catches its breath. So, with these three scenarios in mind, what are the key things that we should be watching? Well, the report gives us a pretty clear checklist of indicators that'll tell us which one of these futures is becoming more likely. It really boils down to three things. First, watch the trend's strength. Is that upward push getting stronger, or is it starting to get tired? Second, keep an eye on that RSI we talked about. Does it punch through that 70 red line, or does it start to fall back, signaling exhaustion? And finally, always watch the volume. High volume will confirm the move, while low volume makes you wonder if it's for real. And that leaves us with the ultimate question that this report is really asking. We're at this fascinating crossroads where incredible momentum is in a tug of war with signs of exhaustion. So what do you think? Is that bullish engine going to keep redlining its way to new heights? Or is a cool down not just a risk, but an inevitability?